Hello everybody. So today I want to answer two separate topics. First of all, I want to talk about MSTR achieving top collateral status with the margin requirements changing on that stock at most brokers I've checked. And I also want to answer once again the question, can a CEO change their mind? And yes, I believe the answer to that is yes. And the comeback of the ATM is more than welcome. We need to achieve the long-term targets, the BTC yield targets for the end of the year. We tried for 2 weeks. The stock didn't bounce. Let's go back to making money via issuing the common ATM. So let's begin and talk about this piece of news, which kind of was left unnoticed, but MSTR is now Pristine Collateral at Robinhood and at many other brokers. Go ahead, go check on your broker. It has a 25% maintenance ratio, like most $100 billion companies. So this is very, very good. And perhaps some of this has to do with the volatility going down a little bit. So this is very appealing. I love it very much. It's the same as Apple. It's the same as the S&P 500. It's the same as the NASDAQ. It's amazing. It's amazing. It's a very big deal. Why is this a very big deal? Because a house that you can finance, a financeable house, is more valuable than a house that can't be financed. So comparing MSTR to, say, other Bitcoin treasury companies, I invite you to go look at some of the smaller Bitcoin treasury companies, and you'll see that very often the maintenance ratio is 75% on some of the quote-unquote competitors. They're not really competitors, but you know what I mean. The copycats of MSTR very often 75%. Some of the newer ones even have a 100% maintenance ratio. MSTR is borrow against ready right away. And so this makes it more valuable because it is the house that can indeed be financed. This makes the buy, borrow, die method even more viable on a stock like MSTR. It makes it just as viable on MSTR as it does on, say, the QQQ. So it's quite outstanding. And of course, Reg T has not changed, right? It's still 50%, so you may not see a change in your total margin at your broker, but this is a big deal, the 25% maintenance ratio going from, say, 50. It was at 50 before on my broker. Some people still had it in the 70s. But the bigger advantage, of course, of having the maintenance ratio deviate from the 50% of Reg T, of course, is the fact that you can now withstand bigger drawdowns. Bigger drawdowns can now be sustained because we have a very low, the lowest allowable maintenance ratio, a 25% maintenance ratio. Now that I've said all of this, it is very important to always keep in mind my take on margin. Use sparsely because you have wipeout risk. You have total loss risk when you use margin. The wipeout risk. This is Nicolas Nassim Taleb. The outlier risk, what you didn't see coming, right? What if there's, I don't know, a war-like event somewhere and the markets dump 30%? Right? This is always the big risk whenever you take on margin. You're kind of betting on normal market operations. There could be something going on, and so a lot of people believe 10% is on the safer side. Some people believe no margin ever. No margin ever. I personally like the 10%, but it's up to you to look at your risk profile. And of course, also keep in mind, it also depends on the diversification of your portfolio. If you have a very highly diversified portfolio and you have some of less volatile, some behemoth type companies, some real blue chips, maybe 10% is better. If you have just high risk stuff, and like MSTR is your least, quote-unquote, least risky thing, then perhaps I wouldn't touch margin. So let's keep that in mind. I have to say this whenever I talk about margin. I personally love margin as a collateral for secured puts or spreads, like put credit spreads. So I love margin for that. You can just use your collateral, your would-be money or your potential borrowable money. You can use that, and you can just write puts with that as the collateral, and of course the risk here is that if you get assigned, well, you can either take a loss or you can just draw on margin, and you may end up with a position you don't want. There's always a little risk, but the advantage is you don't pay interest, although I will point out that some people want to pay interest on margin because they want to deduct them as investment expenses. So it all depends on your stand, on how you stand on this. And lastly, the last take on margin, if you ever use margin, use a modern broker. Using a modern broker is key. And whether that modern broker is, I don't know, M1, Robinhood, or Interactive Broker, I think it's important. Be very careful of legacy brokers. Legacy brokers kill you on margin. Like some of them still have 13% margin rates, right? So a modern broker like Robinhood, you're gonna be at 5.75%, which is rough. It's unbeatable in the current rate environment. I mean, it's really really low, and the more money you have, the lower the rates. And these rates, of course, likely are going to drop as the Fed drops interest rates. And by the way, if you have more than 10 million or even a million, you can probably negotiate that directly with a broker and negotiate lower margins. For people who do it a lot, for people with very big accounts, they can negotiate. Otherwise, 5.75, frankly, is really, really not that bad. But if you were to look at Schwab, for example, you would be horrified by how much higher it is. So keep that in mind. These takes on margins are always important to remind. Yes, we celebrate, but also always keep in mind the rules of using margin. Moving on to the question number 2. It's not a question, but it's my comment on this is can a CEO, it is a question, can a CEO change their mind? Can a CEO and their mind? The people who were calling for no more ATM, the people who were calling for a halt in the dilution, the people who did not get that the dilution is what gave us the yield in the first place, I don't think they have been celebrating for the past 2 weeks. They've been complaining for the past 2 weeks. And now they are complaining again because he changed his mind. And so there's just no winning to being the leader of MicroStrategy right now. There's just no leading. There's no winning for that management team. I think Saylor did the right thing. It could have worked. Stopping the ATM could have worked. But what we've seen is that the ATM did really nothing. Like selling new shares into strength may not have the impact on stock price that quick Twitter handle and quick tweets make you believe. Oh, he's dumping shares. Well, guess what? He was not dumping common shares since earnings day. So for 18, 19 days, let's call it now. For 19 days, he was not dumping any shares, and strategy went down nearly 10%, while Bitcoin was flat. So there is roughly 10% or 9% NAV compression, MNAV compression, and we didn't do any ATM. Any ATM. Would the ATM have made this worse? I frankly highly doubt it at this point, because if you were to listen the ATM is bad crowd before that, you would have believed that the moment that he stopped the ATM, the stock would go up. So clearly the no ATM advocates, which was a fair hypothesis, but the no ATM advocates clearly did not get the short-term bounce that they expected. Hypothesis was out there. Hypothesis was tested. We waited nearly 3 weeks. Now it's time to get back to the normal course of business, which is what has been working all along, which was the Common ATM. The Common ATM was working. It's still the main game. I've been calling it the main game. Yes, I agree it's on the decline. Yes, I agree the preferred will take over. But, we tried. Didn't work. Let's go back to normal. And why not do it for longer? You may say, oh, we got to wait another 2 weeks. Well, do you? Because if you wait another 2 weeks and it still doesn't work, and if you wait another 2 weeks again on top of that and it still doesn't work, how are we going to reach the guidance? How are we going to reach the Bitcoin guidance without issuing shares on the Common ATM, right? I would love to sell $1 for $2.50. I would love that. But right now, the market is allowing us to sell $1 for $1.50. I'll take the 50. It's nice. It's not as nice as $1 for $3 or $1 for $2.50, but $1 for $50 is still accretive and you can still generate yield. And so there is still demand for the MSTR common. The MSTR common is what most people want still to this day, and especially retail. Maybe institutions at some point will start loving the preferreds, and they like them very much. He's been very successful with preferred, but not in the same order of magnitude as he has been successful with the common stock. The common stock is a story that is much, 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 much better understood by Strategy's customers, and Strategy's customers are the buyer of its equities, the buyer of its preferreds, the buyer of its refined Bitcoin. Refined Bitcoin is what MSTR does. So anyways, that's my take. I think this was played as well as he could have possibly played it. Don't ignore the request of the market. Try it out. It didn't work. Go back to what used to work. And of course, you could also say, you could have tried 4 weeks, could have tried 6 weeks, but then you get into the risk of not reaching the guidance. And long-term shareholders would be very upset if you don't reach that guidance, because the Bitcoin accumulation is the main reason why long-term shareholders just want to own the common and just sit on the common and do nothing and just wait until the 2030s and enjoy life in the 2030s. So anyways, that's kind of my take on this. So this was not investment advice. This is not financial advice. This is only entertainment. Only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. Thank you for watching and have a wonderful, wonderful day.